market analysis breakdown for you for December 4th. We're going to see how the markets ended up today and what's shaping up with the new day as it's starting. And before we get into that, we just real quick want to pull up our disclaimer to remind you that this webinar is just for illustrative purposes only. With that, we're going to jump on our live screen and we're going to go to the Forex-Trading-Unlocked.com website where we already have the workstation page pulled up. And we're going to look here and let's see what we have going on for tomorrow and today. Let's see. So for numbers, there definitely are some numbers coming out for the pound. Let's see. We have employment numbers, retail sales, GDP, and let's see. Trade balance for Canada, trade balance for the U.S., initial jobless claims, obviously, because it's Thursday in the U.S., and let's see, PMI for Canada as well, durable goods for the U.S., that's a bigger one. Factory orders, that'll be another big one. Excuse me. And then we have our Japanese yen leading indicator also. So actually, there's a lot of numbers coming out for the December 5th trading day tomorrow. And then we obviously have the 6th and some other numbers coming out for Friday, but let's just concentrate on the short-term future right now. So let's see, we're going to take off the news here and we're going to get rid of the volume. As you can see, the volume actually did uptick a little bit. Now look at this, the euro had a really nice rally to start the week out, and then here we got let's see, we are on December 5th. The trading day just started a couple hours ago. We're finished in Chicago, and as you can see that today actually we had pressed higher move highs. We had a nice little breakout confirming bullish strength, but it settled slightly lower. Now this right here is a short-term pause. Some people would look at this candlestick pattern and look at it as just a sell signal, which if it had been rallying, like for instance in this case, like in this rally here for a couple weeks, and we came into this kind of a blow off top, then I would say maybe we would be looking at a potential correction. But right now, I think if anything, you might have some consolidation. And let's take a little look at where this level is. Now, right now, where we're trading is pretty much where we've had, as you can see, once I get the color out on this, let me darken the color for you. So let's see, so you can see it, make it green, make it big, as you can see how quickly you can do this with our charts on our website. So let's look at this level here. This is a $1.1073. This is an area where the market obviously support, and then we had the failure. Then we also had resistance, failure. Then we had where it ran through it, popped above it, and then it became support. We got rejected, and then boom, failure. Got resisted, boom, now we're just hovering above it, but we made new highs. So here's the significant thing is that we've come down from this low to a lower move high, to a lower move low, to a lower move high, to now this lower move low that was stamped out on Friday. Now, within just a couple of days, we've actually made a higher move high. So this being said, is it bullish? Not necessarily. It's more like neutral to higher rather than being bearish right now, because especially Friday, after having made that low, even though the market exploded on Monday to start the week off, excuse me, that was on, on Monday, and made these nice moves and came right and settled above this little line that we put in here, as you can see, where this was a low here, and it's been pretty much the high and top for this area here. So this is a very strong directional pivot line for us for the euro. So what does that mean for us? Well, let's see what we got going on here. We'll take a longer term perspective, and we know that this market started to turn around at the beginning of October, and then it ran into a lot of trouble at the end of October throughout November, pulling back. Now, a lot of this could be dollar index related, and that's what I think you're starting to see here, is that the reason we had this big blow-off rally on Monday was because the dollar index had fallen apart just a little bit. And so just so you have a kind of a clue as to what I'm talking about, the dollar index had, and this is a very interesting thing too, and we'll see this as it pulls up, and the dollar index had made a higher move high and then a lower move low, all within just a couple of sessions. So that is actually not just kind of, it's very significant as far as how, there we go. So here we have the dollar index, which on Friday had stamped in this high, and then here right away on Monday, when we opened up, it just slammed. So that's kind of like that rally we saw in the euro, except the opposite direction. Well, this would be dollar weakness, and that's what we saw with the euro US dollar trade. Then we had follow through that came through on Tuesday. Okay, and then we have today, Wednesday, where we made new lows. So we established a higher move high here, and we took out this low. So overall, I think that you're probably going to see the dollar index remain under pressure now with this downward sloping resistance line. The overall market has been sideways to lower over the past month and a half, especially since the past 2 months, since October, the beginning of October, on October 1st, when they had this big extreme sell-off, and then it looked like the market wanted to turn around in October, beginning of November, and it grinded higher and fought and fought and fought, and as you can see on Friday, it pressed a higher move high, giving all your bulls every reason to get all crazy, thinking that we were going to make a run for 99. Now, what really is starting to look a little about this one also is that we're starting to have almost like a gigantic head and shoulders that's forming here, and I'll show you here with this. We're going to keep this right here. I know it's not that steep of a support line, but as you can see, we're kind of wedging towards it, and I think that this is going to be the determinant as far as bulls and bears as we come down on these two lines for support or back up against the higher one against for resistance. So after we do a wave count, let's think about what do we really have here. Well, we had set this low here. Then we made this higher move high, higher move low, higher move high. Now we got a lower move low. So that has us in a neutral to bearish posture, which I think that over the next week or so, and especially into next week, unless we have some major moves where we might start to fall into a very sleepy sideways trade as we get into the end of the year. Remember, we have a lot of balancing that goes on in the end of the year with a lot of companies where they have to do some conversions. So there's going to be a run on buying dollars, or at least typically there is. So it would be not unlikely to see some strength come into the dollar index over the next couple weeks, especially as we get closer to the end of the month, the end of the quarter, and the end of 2019. Yes, we're heading into 2020. We're about to close out another year. All right, so we're loading up the British pound US dollar. Now, for those of you who have been following the currency markets, especially today, you know that we had, wow, did we have a nice little breakout, right? So let's see, we took out this high here, which had been containing the wedging kind of trade for the past month and a half. And now we had a nice explosion where it got all the way up to just above $1.31 here. And even still tonight, in the early hour trading for the British pound US dollar, which they don't even open up yet for a few more hours in London, it's holding firm just below their highs. Now the dollar index had come back off of its lows after selling off really like it has for the past few sessions, and it actually had a really extreme move. Now we started out looking at the euro US dollar, and you could see that even though it had a nice rally and it looks good on the chart, the fact is that the average true range for the euro US dollar has been so tight for so long that a little half a point move starts to look like a gigantic explosion for that currency. And there's reasons to hold back on the euro, even if it is gaining strength against the dollar. Any rallies, I think, are going to be subdued to a degree just because of the fact that the euro has its own issues, which we'll be seeing out what the numbers come out tomorrow. It'll be very interesting for the numbers for the pound, and also the numbers for Germany, and also for the euro zone, because we have the December 13th vote coming up in the UK, and this could be another reason why the pound was lifting today, is because I guess the polls over there are very favorable, well, not very favorable, but are favorable towards Boris Johnson and a potential lead to Brexit. I know we've been talking about that for years now, literally. So, but it does appear that unless he gets messed up in some kind of a gaffe or something like that, his popularity is at least at a level where it's enough for him to maintain things and then move forward with the direction of Brexit, whatever that shall be, and which will obviously impact the trade between the Eurozone and the UK, and as well as also the United States and other countries with them as well. So it's going to be, it definitely has global ramifications. To how much of a degree will remain to be seen. So we will have to see with the way they've been pushing out the Brexit deadlines. There hasn't been any real reason to get overly excited about anything. So I don't want to get too wrapped up on that. So with that being said, we now have this kind of a wedge, upward sloping support line here. And then I would still key off of this prior high here where we have the breakout for support. Trading below there, I think we'll have you at least being in this contained within this range here. And then we'll take a, let's see, a failure here from where we started this rising support line. This would be your downside pivot right here. Then if any trading below $1.2754 would probably have the bears on edge, really trying to slam support and get back down towards maybe this area here down at $1.25. However, I do not believe that is the case. You have to remember that before the other currencies turned, the pound had already begun its rally, and that is the fact, is that this market has been in an overall rally now for months. Even with the dollar index coming back, excuse me on that one, we clicked too soon. There we go. All right. So we also have this upward sloping line here for it to come back to. So this wouldn't be out of the realm of possibility, like I said, to come and test this bottom part of this channel over time, especially as we wind out the year. Remember, we have the election on the 13th. So to kind of give you a better visual on that, we'll put a vertical line on December the 13th, and we'll give it a little clarity here, change its color, make it dotted. As you can see, this happens real quickly. Okay, so this vertical black line here, this is our election date for the pound US dollar, which you can see is we're right on top of it. Today's December 4th. It's on the 13th, so we're 9 days away. So when it's considering what time of day it is already in Chicago, we're actually probably only 8, depending on where you are in the world. So that being said, we're going to look at see how the pound reacts tomorrow. I think that if the dollar index stays heavy and it does start to revert back to its lows and hit support again, I would be very leery being a bear in the pound US dollar trade. If you're already a bull and you've realized some nice profit, wouldn't be crazy to take a little off the table maybe tomorrow, especially if you get a nice rally. But this market, it blasted at 131.10 in a heartbeat. We could be at 133, I think, very quickly, just as easily too over the next couple sessions. Does that mean we're going to get all the way up there? No, not necessarily. This could be the extent of what we see. But like I said, if the dollar index is continuing to erode, most likely you're going to see a little lift to the pound as well as the euro that we already had looked at. So we've already looked at the dollar index. Let's look at the US dollar Swiss, because this is a very interesting chart. We looked at the dollar index, and you noticed how I pointed out how it had made the recent higher move high on Friday, and then turned and made the recent new low. Oops, we got the wrong symbol here. US dollar CHF, that would be the Swiss. So it made a newer move low, which has the dollar index, like I said at the beginning of the video, on a neutral to bearish posture. And look at what the Swiss did too. Here we go. This market did the same. It made a higher move high here, and it had been rallying for the past since the middle of October. I mean, it was selling off, but every time it held. And then here, as you can see, it took out some very strong slow, lightly sloping support here, which is not too steep. That's a good channel line to maintain a bullish posture here and bouncing up over this. However, this is the key right here. It got rejected at parity. Once again, it seems that no matter what's going on with the dollar, whenever it gets the Swiss into this little area here, that it starts to run out of gas. You can look back on the chart here and see where it was rejected. Now, does that mean it's going to become a bear and get beaten down? Absolutely not. And even if the dollar index starts to fall apart, it doesn't mean that the US dollar Swiss may not completely fall apart, as certain other markets may start to gain strength against the dollar. So the question is, how much stability is there in the EU, especially with the new vote coming up on the 13th and then moving towards Brexit? So I think that it would behoove any currency traders that trade in the euro, pound, or Swiss currency crosses to pay attention to those dates, especially for getting some potential either wild, crazy, erratic swings or having some basically drying up markets. Remember, the pound that we just recently looked at was going sideways for a month and a half, which is very rare for that market, and even when it does, it typically has bigger ranges and some swings in it. Not like wedging like it did. It was very from my experience, it's not very common to see the pound actually trade that way. Maybe on an intraday basis for a certain day, an amount of time, but not on a ongoing trading basis over a couple of weeks. All right, so we've noticed how the dollar has been rejected here and has made lower move lows. Once again, putting us in a neutral to bearish posture on this currency. So the U.S. dollar Canada, we mentioned that there's some numbers, and they had some interesting things earlier in the week that seemed to kind of get the Canada sparking a move initially, and then it seemed to dry up every day. So let's pull this up. There we go. So you can see how yesterday it reacted really hard. Excuse me, not yesterday, today rather. Sold off. But see, yesterday it hadn't done it. The dollar index had been moving already, and other currencies have been moving, but the Bank of Canada had their meeting yesterday, so that was the reason why most likely that it stayed tight. And this is where I had to worry about, was that we had run into resistance here and support here. The breakout was the move that we were wondering which way is it going to go. Well, the curious thing about this is we came off this low, we made a high, higher move low, higher move high, higher move low, higher move high, kind of high, well, higher move low, and then here, lower move high, and then boom, we took out this low as well. So to give this kind of a little clarity, where the market is trading right now, taking out this low is kind of significant, especially considering that, like I said, the dollar index is weighing pretty heavy. And while the dollar index had topped out on Friday and started to move pretty heavily on Monday, this market rallied. The dollar actually got a rally against the Canada. Now, I think that is probably most likely due to the fact that the Canadian Central Bank, or the Bank of Canada, was meeting this week, and I think that was, and also there was some trade talk things that I guess were sort of somewhat hashed out between the U.S. and Canada as well. So that's kind of a good deal. So right now, follow the dollar index. Dollar weakness seems to definitely be touching off the Canadian dollar. Now, be careful about being a bear here. So the recent high, I would think this is where you would want to key off of for your risk as far as being a bear. But as